Ladies and gentlemen, good day and welcome to the Century Enka Limited Q2 FY23 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Sharma. Thank you, and over to you, sir.
Yes, thank you, Myron. On behalf of Quantum Securities, we welcome you all to Q2 FY23 result conference call of Century Enka Limited. We thank the management for giving us the opportunity to host this call. The management is represented by Mr. Suresh Odani, the Managing Director, and Mr. Krishna Gopal Lachkarya, the Chief Financial Officer. I now hand over the call to Mr. Suresh Odani. Over to you, sir.
Thank you and good afternoon, everyone. I would like to welcome you to our Q2 FY23 earnings conference call and wish you all a happy Diwali and New Year. Let me first brief you on the operational highlights for the second quarter of FY23. We had a moderate growth in revenues due to marginal degrowth in volumes in Q2 FY23 by around 3.8% year-on-year to 18,100 metric tons. Demand for NTCF was influenced by moderating replacement demand and decreased tire exports as a result of global slump. The NTCF margin is under pressure as a result of substantial decrease in Chinese NTCF prices. OEM tire demand has increased, although it remains below pre-pandemic levels. The result of war between Russia and Ukraine and the rebound in Chinese demand will define the near-term view. However, the medium to long-term view remains favorable due to an anticipated rise in economic activity. Cost of fuel and power also rose sharply, which negatively impacted the margin. In nylon filament yarn segment, lower demand was witnessed as weavers were in wait-and-watch mode due to falling price scenario. NFI margins were impacted by sharp price corrections in line with caprolactam price corrections, which have declined by around 20%, while all costs remained elevated due to stock in trade. The volatility in caprolactam prices is expected to persist until Chinese demand and the geopolitical situation stabilize. China is dumping materials due to a slowdown in its domestic markets. Imports from China more than doubled in second quarter of FY23 compared to the same period last year. Our ability to pass on cost increases is being hampered by Chinese dumping. On the capex front, all capex approved by the board are proceeding as planned. Capex deliveries began with some equipment delays from China and Europe. However, we hope to commission on scheduled time. In H1 FY23, there was a cash outflow of rupees 128 crores for the ongoing capex. The NTCF expansion is expected to be operational by Q4 FY23. Full capacity of polyester tire cord fabrics is expected to be commissioned by next year, fourth quarter. NFI value enhancement capex was completed near the end of Q2 FY23. NFI capacity expansion will be completed by Q4 FY24. Now I'll request our CFO, Mr. Krishna Lachkarya, to brief you on financial performance.
Good afternoon, everyone. We wish you a happy Diwali and a prosperous New Year. Let me start with the financial result for Q2 FY23. The operating result for Q2 FY23 stood at 563 crores, an increase of 5% year-on-year. EBITDA for the quarter stood at 38 crores, which was a decline of 36% year-on-year. EBITDA margin was 6.73% for the quarter. Profit after tax was rupees 26 crores, a decline of 38% year-on-year. PAT margin was 5% for the quarter. NTCF sales for Q2 FY23 increased by around 1% year-on-year to 276 crores, while NFI sales for the same period increased by 7% year-on-year to 258 crores. The operating revenue for H123 stood at 1131 crores, which was an increase of 18% year-on-year. EBITDA for the year for first half stood at 99 crores, which was a decline of 18% year-on-year. EBITDA margin for the half year was 8.75%. Profit after tax for the half year was 66 crores, which was a decline of 21% year-on-year, and PAT margin for the half year was 6%. NTCF sales for H1 FY23 increased by around 7% to 561 crores, while NFI sales increased by 27% to 503 crores. NFI sales increase was mainly on account of COVID second wave, which had hampered Q1 of last year. With this, we open the floor for questions and answers.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Shubham Agarwal from Equitas. Please go ahead.
Yeah, thank you for the opportunity. So my first question was slightly near term on the margin front. The company has been facing headwinds from both the demand and supply side. So I wanted to know your view how the margins will pan out for the rest of the years, given in light of the current situation.
Okay. Are you coming with the second question, or should we respond to this first?
No, we can do question wise.
Okay. Right. So, the main reasons for margin squeeze in Q2 was one is a significant increase in the power and fuel cost, and which is a phenomenon across all industries due to elevated prices of crude as well as coal and impacting other alternate fuels as well, which is expected to remain high. And while there has been some corrections both in crude oil prices as well as the coal, due to the uncertainty of war, it's very difficult to predict what levels will prevail for the entire Q3 and what happens in Q4. But at least Q3, we expect that this volatility and high levels of power and fuel would continue. If any respite comes, it will be dependent on the Russian-Ukraine war as well as other geopolitical issues. So that part would continue to press margins in Q3 and possibly in Q4. The second reason for significant drop in margins in Q2 was a very substantial fall in caprolactam prices, our underlying raw material, by about 20% in just a space of 3 months. And that's while we feel that it has stabilized towards the end of September and till early part of October. The uncertainty again due to geopolitical issues as well as Chinese market and Chinese local demand will determine the price levels which prevail for caprolactam. And this while we don't expect a similar 20% fall in the caprolactam prices in the quarters coming and Q3 and Q4, but the volatility can continue. So that uncertainty would remain, and we do expect some margin pressures, especially in Q3.
Okay. And so what would be the total stock in trade left for caprolactam in terms of high prices for us?
Normally our stock right from raw materials to finished goods in the pipeline is about 60 days. While we have reduced our stocks, particularly on the NFI side in Q2, in anticipation of the fall in prices, where the finished good prices correct quite immediately after the fall in raw material prices. So we do expect the stock levels to impact Q3, particularly in the initial months of possibly in October and November. And once the price levels of underlying raw material stabilizes, I think we'll have more stability on margins.
Okay. And the spot price of caprolactam in China has further fallen down in the last 1 month. I think the last time I read was 1650. So does this impact or increase dumping from China to us?
No, the prices, yes. One important thing which is happening in China is there is a normal margins between various value chain parts of from benzene to right up to the fabric or the yarn. The margins between the various segments like lactam to chips to yarn, yarn to fabric have been quite volatile, and that impacts certain products getting dumped to India. And that was more a phenomenon because the prices were falling week on week.
Okay.
The pace of falling, I think, has reduced. We see a more stability around $1,700 for last few weeks, and if that sustains, because there is also a cost pressure on the underlying raw material for upstream not going down. So there has to be a limit as to what levels they can fall and at what levels the Chinese companies can operate at. So that kind of uncertainty would remain. However, as I said, if the fall is not significant, normally the markets are able to absorb and the prices get adjusted.
Okay. Okay. Sir, and secondly, on the power and fuel costs, you said that the high cost will continue. So just wanted to have one clarification on our investment of 9 crores in the CPP. So,
sorry, your voice is cracking.
Yeah, I wanted to know when the benefit of our investment in CPP kicks in, which will reduce our...
Yeah, it's not actually a CPP. It's a hybrid power of solar and wind energy, which is being implemented through a SPV company. So we expect that to commission in Q4, and we should start getting benefits immediately once it gets commissioned, because normally once the wind and solar plants are commissioned, they normally run at and they achieve their optimum capacity very early.
Got it. So from Q1 onwards, we can expect that benefits to follow.
Yeah,
okay.
From Q1 FY24 definitely, but we hope that in some months of Q4 as well, we should be able to get that benefit.
So, and got it. So one more question I had around the capex. So our capex of around 12,000 ton is expected to come from Q4 onwards. And given then that the demand scenario also doesn't look great and supply also is increasing from China, how do you see, next 1 year possibly?
I think this, particularly the last 2 quarters, have been quite normal because of the war in Ukraine, which has disturbed and as also the significant COVID-related lockdowns that China has been implementing very strictly. I think there are 2 disturbing factors which have impacted our business significantly, and we don't expect, as of now to say it's with certainty would be difficult, but we don't expect that to continue in the next year, next financial year. And second is Indian economy has been doing well. A lot of the underlying segments, particularly the medium and heavy vehicles, the goods movement, the GST collections and all others look promising in terms of volume growth. So we do expect that FY24 should be more normal than compared to FY23, and obviously that is dependent on a lot of geopolitical challenges that are currently prevailing.
Got it. Thank you for answering my question, and best of luck.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Manish Dhariwal from Fiducia Capital. Please go ahead.
Yeah, thank you for this opportunity.
If you would come a little more closer to the mic, your voice is slightly feeble on the call.
Yeah, sure. Is it better now?
Yeah, it's much better.
Thank you. Thank you so much. Okay. So basically, I wanted to understand, a little bit more about the industry. See, the company is present in two segments. One is the NFI, and the second is NTCF, which is the tire cord. So this tire cord is basically only used in those ply tires, or is it also used in the radial?
No. See, the nylon tire cords are in the truck and bus segments are used in the bias tires and not in the radial tires. Whereas in certain other categories like farm and OTR, off-the-road vehicles, two-wheelers, three-wheelers, and LCVs, only or mostly NTCF is used. So there are different technical reasons why NTCF is used, but truck and bus is the only category where you have bias tires as well as the radial tires.
Sorry, sir, I didn't follow. So in truck and bus, it is the NTCF is used in both bias as well as radial.
No, it is not used in the radial, only in the bias tires or the cross-ply tires.
Yeah. And so, yeah, that's what my understanding was. So, but in the other segment, that is the non-truck and bus, are they also used in radial, like passenger cars? Is NTCF used in...
Passenger car anyway does not use nylon tire cord fabric. It is on polyester tire cord fabric. So there is no nylon usage in passenger as of now. And passenger car tires are almost entirely on radials. So because fuel efficiency is very critical for passenger vehicles. So in India, also internationally, almost all the tires are radial tires, which use polyester tire cord fabric.
Which is what you are setting up a capacity for.
Yes, we'll be getting into this segment by Q4 of FY24.
Wonderful. So thank you so much, sir, for this clarity. So now I understand that you have 20% market share in the NTCF, which is a big business for the company. Now, so who are the other competitors, sir?
So there are two other players. One is SRF and second is Madura International Limited. And imports, obviously, from which is
exactly, which is creating a lot of concern because a lot of this Chinese dumping is actually impacting the pricing scenario. So sir, how does the order? See, I think you only work with the OE. So sir, how does it work? Meaning, you get the order for how many months in advance? The firm orders, not the the visibility, but the firm order. So is it like 3 months in advance, or only monthly they give you the orders, or how does it work, sir?
So we have an indicative annual volume because our volumes are dependent on offtake of their tires of the OEM tire companies, and which goes both to their the auto OEMs as well as the replacement market. So we get an indicative volumes for the year, which we finalize mostly at the start of the year, and then we get a more firm demand on a monthly basis.
Yeah, so that's what my understanding was. Right. Okay, sir. Okay. And then also coming to so basically our NTCF is primarily used. It's an OEM product where the margins obviously would be depending on the kind of negotiations one can have with the OEs who basically are always under pressure. So now on the NFI, so how does that work? So is there meaning how does the NFI industry work?
NFI is more scattered with multiple producers and much larger customer base because our customers are weavers who make fabric for either dress materials or saris or various innerwear. So there are a large number of weavers spread across India, particularly in the western India, which is a prime hub for man-made fiber-based fabrics. So this is very different from NTCF market because we deal with a large number of customers through a dealer network, and since there are multiple producers, there are obviously margin pressures as well as the differentiating part is because cloth is something where the kind of finish and the look makes a difference on with the same product. So there are a number of products. The SKUs are very large in terms of deniers, shine, finish. So it's very different from NTCF because one is an industrial product, second is a product which forms a part of a consumer value chain.
Absolutely, sir. Absolutely. And sir, I know that you also getting into these specialized segments. So, sir, where I think the market will be a little more stable and the market will be a little more, margin. So, how is your efforts in that direction kind of proceeding ahead?
Our focus on NFY is value addition only. On niche products as well as value addition, it's not volume. And we have commissioned, for example, a small capacity in the end of this quarter, Q2, which is raw textured yarn. Basically, there's a competition even from value-added products from China is also less. Because these are very customized products which is required by specific weavers, our customers, and we work with those customers to develop products specifically for their end use. So that's where we try to maintain our margins or maintain our leadership in this segment when the competition is also from a lot of unorganized segment.
Right. So how much of your NFY business would be towards the specialized segment?
There's no accurate data on that because we work with a large number of customers and they have a combination of both. So it's not that we can give a straight answer because that data is not very accurate and not also because the weavers are so spread out and there's no association to collect that kind of data. But that segment remains an attractive segment because ultimately garments or fabric or apparels, everything has to be different or unique. And that's why the differentiation always comes in what kind of yarn and what kind of look and finish comes in the final, either the garment or the fabric.
Right, sir. But sir, then like see, as a business leader, so like you would usually want to ensure that your EBITDA margins become more stable. Although the industry that you function in will continue to have these vicissitudes. But so see, like I know that the margins, like the EBITDA margins, they range from like 6.55% to 12.6%. And every year there is so much of volatility. So sir, then what kind of how are you kind of trying to ensure that some bit of predictability can come in the business model?
See, when we have a large imports which can come from China, that is very difficult to predict because our size of industry is much lower than the Chinese capacities, and we are integrated to that capacity with even the duty protection is quite low at just 5%, 5.5%. So difficult to predict, but our strategy in this segment is to go for niche products and go for value-added products. As I said, we are not looking to any volume growth on overall terms in the NFI segment except for the niche segment, which will be also very small in the overall context. So our focus will be on segments which have less threat from the imports as well as where even the domestic competition is not easily able to catch up quite fast.
Wonderful, sir. Wonderful. In fact, that I think will only bring in more stability, I guess, and will basically have more assured kind of a supply scenario with your customer base at some predictable margins. So fair enough, sir. So lastly, sir, I just want to understand so that you just set up this NFI value addition capacity that closed in the last quarter of 23. So what was this about? You mentioned some textured yarn. So can you just explain a little bit about what this was all about and what was the capacity size like?
See, while we show NTCF and NFI, we actually operate in one segment because the raw materials are same, a lot of other things are common. So we are not getting into any volume breakup of either the overall segments or within the segments. But as I said, the strategy is to increase the value-added share in the NFI segments, and that will be continued in the forthcoming years as well.
Okay, sir. So right now, we have 78,000 MTPA, which is the consolidated capacity for both NFI plus the NTCF.
Yes.
And sir, this NTCF capacity of Q4 FY23 commissioning that's happening, so that is for how much, what capacity?
So total, we expect about 10% increase in the capacity by end of FY23. But the full volume gain will come from FY24 for the NTCF expansion.
No, so I just want to understand the capex, the capacity of the capex program.
Sorry.
So there are four capexes that you are talking about. So one is the NTCF capex, which is commissioning in the Q4 of FY23. So
yes.
What would be the capacity for that particular capex?
That's, I said, our capacity will increase to about 86,000 by FY23 end. Total capacity.
Okay.
Yeah. And when all the capacities are commissioned, it should be around 95,000 tons by FY24 end.
Okay. Which you mentioned as NFI capacity in Q4 FY24. Because your polyester tire cord is a separate project for 12,000 tons.
Yeah, so that will also come in most likely in Q4 FY24, and on a combined basis, we should reach at about 94,000. 94 to 90.
Absolutely, sir. Thank you so much for a very detailed answer. And so my last understanding was that I needed on the capex amount.
This is the operator. Would request you to kindly come with follow-up questions for in the queue.
Sure. Thank you. Thank you for this. Thank you.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Pranav Jain from HDFC Securities. Please go ahead.
Thank you so much for this opportunity. Sir, so wanted to have an understanding about the vacant land which you have at Mahad. So what is the value of this land, and do you have any plans in your mind for materializing this?
We have not got the land value because, first of all, there is no intention to sell in the immediate future. But as also on any new projects on the same land, we will be able to announce only once it is finalized, if at all, whenever. And but as of now, there is nothing concrete to say that in the next 1 or 2 quarters will come on that land. But we do keep evaluating alternate opportunities, and as and when something fructifies, we'll inform it to the stock exchange as well as in the earnings call.
Okay, thanks. And sir, secondly, after the PTCF capacity is commissioned, so what would be our market share in this space?
PTCF is currently, mostly dominated by imports, and as I said, the consumption mainly is in the passenger vehicles.
Okay.
So our capacity will be a small capacity of the total current demand. Difficult to predict that because the way auto segment has been growing and the personal car usage had not normalized but has been continuously improving. But it will be a small capacity compared to our NTCF share.
Okay, what would be the number, sir? The amount of capacity in this space?
As I said, we'll reach about 94,000 on a combined basis for all the man-made fiber as well as the fabric made out of that.
Okay, sir. Okay, thank you, sir. And sir, thirdly, is it possible for you to give a breakup between the margins of NTCF and NFI, because this is the only thing which is not mentioned in your presentation and also in the previous quarters, because it gives a better picture regarding the margins. So is it possible to give a breakup in this segment?
We have been reporting our operations in one segment as man-made fibers, and we will continue to do that. And for competitive reasons, in the past calls also we have mentioned that we will not be giving a breakup of other volumes or margins for the two segments.
Okay, sir. Okay, sir. No problem.
Two sub-segments. Yeah.
Thank you so much, sir. Thank you so much.
Thank you. We have the next question on the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. I just want to know what will be the polyester cord capacity, sir, once the expansion is completed?
As I mentioned in the previous question, the total capacity, we report our capacities on a combined basis for all sub-segments of the man-made fibers. It will be about 94,000 after all current CapExes are commissioned.
Oh, so you would not list polyester as a separate segment?
No, it will remain as, these are all man-made fibers coming from polymers, so this will remain as a segment on a combined basis.
So in polyester cord business also, margins are more or less same as NFY and NTCF? Can you give any broad color? I don't want any figures, sir, but if you can.
We are getting into the segment, and the reason to getting into this is that margins are attractive. So we expect that these should be similar or in that range of, because they are again going to the tire segment, which operates in a different context versus the textile segment. So we hope that margins should be similar or closer to NTCF margins.
And sir, you have mentioned that caprolactam prices have fallen 20%. So your net realization of NFY and NTCF have also fallen similarly quarter over quarter, or the fall is more than 20%?
Yeah, it is almost similar because as in NTCF there is a lag of 1 month. So in pass-through, whereas in NFY normally prices correct immediately, and when their fall is significant, sometimes even on a weekly basis, the prices can correct. So in that range, yes, the prices have corrected, but it has been gradual. This 20% did not fall in 1 month. It is between end of June to end of September, and in certain weeks within this quarter, the fall was significant. In certain, it was more stable. So can't give one, but yes, the fall has been in that range because ultimately our finished goods prices have to reflect the underlying raw material prices.
And the caprolactam constitutes what percentage of your raw material cost, sir?
It is around 65 to 70%. So last quarter it was around 68%.
Okay, so should we expect some more inventory losses in this quarter, sir?
Raw material stock, most of the stock remain at cost. So some amount of raw material is still priced at a price which is higher than the running raw material prices. So there will be some loss in October if prices remain at these levels.
Okay, sir. Thank you and all the best for the future.
Thank you.
Thank you. We have the next question on the line of Anand Mundra from My Temple Capital Advisors. Please go ahead.
Hi, sir. Sir, wanted to understand in the NFY segment, do we have any long-term approval-based sales?
No.
How we have an NTCF?
No, we don't. As I said, NFY, we work with our customers to develop special products for them. So, which is not a long term, which is more to do with fashion and the trends that are going on. And depends on if there is an import fabric or import yarn which is coming, which can be replaced by domestic yarn. So, there's no long term, and the approval process is also not long. So it goes through a short cycle, and once the product is approved, then it comes into a regular commercial production depending on the demand for the finished product made from such yarns.
Okay. And sir, what is the value of the facility that we've commissioned, the NFY value enhancement facility that we've commissioned?
Small one, just about, in value terms, there's about 6 crore rupees.
Okay. All right. And sir, in the earlier presentation, it was mentioned that our capacity after all the capex is completed would be about 98,000 metric tons per annum. But now you're mentioning it's about 94,000. So has there been some change?
No, one is in some of the segments in NFY, we are doing a portfolio analysis to correct the capacities or to stop some certain old capacities which are not viable. So we expect that some capacities would become offline because these are not viable in terms of the current new machines, or the product by itself is not very competitive, particularly against imports. So that's why, yes, there has been a correction, but we expect, and then there is normally some impact due to the change in deniers which are required based on the markets. So this capacity can be 1,000 or 2,000 tons plus or minus on an annualized basis, because we are taking in tonnage, whereas the sale is dependent on the deniers that are more prevalent in that period. But yes, we expect it to be around 94,000.
Okay. So, sir, will there be any write-off of the obsolete machinery or anything of that?
No, these are already, fully depreciated equipments, because what we are doing is doing away with old machines which are inefficient or where the products are not competitive against imports.
Okay. And sir, what is the import duty on NFY and NTCF at the moment? And is there any anti-dumping duty present in any of these segments?
No, there is no anti-dumping duty. There used to be, but which has been withdrawn almost a year and a half and 2 years back. NFY was much earlier. And the current duty on NFY is 5.5, including the surcharge, and on NTCF it is 21%.
20%.
20%, sorry.
20% and with surcharge around 22%.
20%.
But in case of NFI, there is a anti-dumping from Vietnam and Europe. So that anti-dumping duty is there, and Vietnam earlier Vietnam used to be a large exporter to India, and they used to dump because there is an FTA. After this anti-dumping duty, the imports have come down significantly. But today the major imports are coming from China, more than around 80%, and there is no anti-dumping duty on China for NFI.
Okay. And on the raw materials, the caprolactam that we import, is there any anti-dumping duty on that?
No.
Okay. All right. And sir, one final question, maybe I can take this offline. Sir, I was not able to find the sales data prior to 2019, even in the annual reports. So would it be possible for you to share those figures?
Yeah, okay. Please take it offline, because I think it would be available anyway at the company website, but otherwise we'll send it to you. Please contact with our secretarial department or the finance team. They will send make it available to you.
Okay, all right. That's it from my end. Thank you.
Thank you. We have the next question on the line of Dharmil Shah from Marcellus Investment Managers. Please go ahead.
So thank you for taking my questions. Well, most of my questions have been answered. I just have some few follow-up questions. So, sir, if you can explain for the radial tires, are there any other tire cord apart from PTCF that are being used, or is it just PTCF that are used in radial tires?
No, in truck and bus segment, two types of reinforcement are used. In the bias tires, it is nylon tire cord fabric, and in the radial tires, it is steel tire cord fabric. So right. We are not planning to, as of now, go into the steel tire cord. There is no polyester which is used in truck and bus segment. In the passenger vehicles, only polyester tire cord fabrics are used. Maximum quantities are from that only, and when I say they are used, these are the, would be the maximum quantities that are used, but we are not experts in manufacture of tires, So if anything else materials are used, I will not be able to comment more on that.
Got it. And as you mentioned, PTCF is mostly imported right now. So any specific country that we are dependent upon, is it China, Vietnam, or any other, or?
But mainly China and Vietnam, which are currently supplying the PTCF to India.
Okay. And again, how much is the import duty, and what would be the fundamental reason for OEMs to source their requirement from Indian vendors?
So import duty is same as NTCF, 20% basic duty, custom duty, and this was increased from 10% in the last budget, and now they are at par with NTCF. So one of the reasons why local OEMs were looking at domestic suppliers is that the China Plus One policy and the huge supply chain issues which almost all countries faced in the last 2 quarters of FY23. So that it's always good to have a percentage of critical raw material being available from local sources, and that's the reason they are keen on looking at domestic supplies.
Got it. Yeah, that's it from my side. Thank you very much.
Thank you.
Thank you. Participants who wish to ask a question, press star and 1 on your touchtone telephone. Participants who wish to ask a question, may press star and 1 on your touchtone telephone. We have the next question, line of Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. So what will be the saving in power cost due to this investment of 6 crores from next year, sir?
We expect, the gain would be basically power rate difference between the grid rate and the rate at which we have contracted with the producer. We expect an annualized gain of about 15 crores from this SPV. Coming to, in terms of power rate reduction flowing to the company.
And when are the supplies going to start from next financial year?
No, as I mentioned, we expect some supplies to start in Q4 FY of the current financial year, but definitely from Q1 FY24.
Okay, sir. Thank you.
Thank you. We have the next question from the line of Manish Sariwal from Fiducia Capital Advisors. Please go ahead.
Yeah, thank you very much for this follow-up opportunity. So I just need to get a handle on the CAPEX program. So that what is the numbers as per your presentation are 128 crores spent in Q2 and 220 crores in FY23. So sir, this 128 is included in 220, and then what about the Q1, or how much is to be spent? And so then how much in 24, because the capacity is coming in next year. So there will be some money spent in next year as well. Because some clarity on the CAPEX amount will be very helpful.
Yeah, so 220 crores is for full year, which include 128 which has already been spent. And total money which we plan to spend, including what has already been spent, is around 350 crores. On the existing CAPEX program, it will be around 350 crores, which will be spent on CAPEX.
So then can we understand that, can we assume that it's 350 minus 220, which is 130 will be spent in FY24?
Even before this year also, there was some money which has been spent. In FY22 also, there was some amount of CAPEX out of the 350 crores was made. So exact amount I will have to calculate and give, but broadly the numbers will be 350 crores on the entire CAPEX program.
Okay. And any debt support would be needed for this, or?
So we are taking loans of around 70 crores, of which around 34 has already been taken in H1, and total 70 crores loan will be taken, which will be to take benefit of tough subsidy for this capex.
Okay. Thank you so much, sir. Thank you.
Thank you.
Thank you. We have the next question on the line of Ramakrishna V from Equity Diligence. Please go ahead.
Yeah, thanks for taking my question. Sir, what is the credit period in case of NFI as well as NT, this nylon tire cord, typically?
Normally, in nylon tire cord, it is about 60 days. And in nylon filament yarn, it is normally around 15 days. It could differ from party to party, but that's the general term.
And when we import, we take out do we get a credit also for the raw material, or is it on the LC basis?
Yeah,
or,
raw material also, it is a mix of credit and cash payment. To local parties, we try to make cash payment to get advantage of cash discount. So wherever possible, because our balance sheet supports early payment, so wherever possible we make early payment and get the cash discount. And for overseas parties, generally it is 90 days credit from the date of shipment.
Sir, the last question is, Mahad, what is the area we have, acres?
Around 68 acre land.
Oh. Thanks, and all the very best.
Thank you.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone.
One minute. Hey, doctor.
Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. At the next question on the line of Pawan Nahar, an individual investor. Please go ahead.
Thank you. So I have two questions. One is that I understand that there would be some inventory losses, etc., but have we seen a spread compression, given that earlier I think we mentioned about we do annual spread negotiation with the buyer for NTCF? And second, if you can talk about your further, if there is any capex plan after this 350 crores. Thank you.
In terms of spread compression on NTCF, yes, there are pressures on NTCF spreads, and although we cannot talk of specific cases or specifics into it, but there is pressure because of global or Chinese NTCF prices coming down. So there is some pressure on NTCF spreads. And as of now, there are no further plan for any capex. Once it is considered by the board, we will announce it on our website and give to the stock exchange.
Thank you.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. As there are no further questions, I'd like to hand it over back to Mr. Prashant for closing comments.
Yeah. On behalf of Quantum Securities, we thank everyone for joining us today. We look forward for staying in touch in future quarters. Have a nice day.
Thank you. Thank you.
Thank you.
Thank you. On behalf of Quantum Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now